All right, welcome back for another episode of This Week in Charts via Carnivore Trades and Wall Street from Main Street. If you're not done so already, please give the video a thumbs up, like, comment, subscribe to the channel. Come find Jason on Patreon. Come find me on carnivoretrades.com for swing trading alerts and analysis. Anyways, let's get into it this week. So spiders here, pretty much a flat week up until Friday. We did have a little micro kind of gap up Friday morning, and then we tested our double top level, pretty much to the penny, actually pierced it a little bit. So high of the day was 431.99, and your double top going all the way back to August was at 431.73. And you can see we just tagged it, and then we came back in a little bit. This whole week was very light in terms of data. The only real data point we had was jobless claims, and that comes out every week. We did have a few surprise rate hikes. Bank of Australia and Bank of Canada did do surprise rate hikes, but so far for the FOMC on Tuesday, we have priced in a pause, and that's what the Fed has indicated that they do. They're not generally in the business of surprising markets, so it would probably take a lot. We do have CPI Tuesday. It would probably take some type of wildly hot print to change that. I doubt that happens, though, this close to the Fed meeting. But lots going on this week. Last week was very quiet. We did hit that technical level, though, but again, with not a lot of data, there just isn't a lot of enough things to move the market, and we had a really quiet week here. But lots coming up this week. We have June OPEX. It will be a quad witch, so everything expiring, futures, bonds, stocks, commodities, all that. And then we have obviously the FOMC Wednesday, CPI Tuesday, and we have the kind of big elephant in the room, TGA refill starting. And we take a look here at liquidity in the markets. It's basically just the Fed balance sheet, Fed net liquidity, and you can see where that is. And we actually tailed off a little bit here, but we'll see if that starts to run off as we get that TGA refill. And that's kind of the elephant. That's what kind of we've been kind of waiting for here to see how that plays out. But until then, markets have been holding up well. Volumes light. We didn't quite get the Selden news there that we talked about potentially with the debt ceiling deal, so perhaps it will be kind of pushed off a little bit until that account starts to fill back up. So we'll watch this here. In any case, markets are still into resistance. So again, we look at the double top there, and obviously we did hit that 618 last week, and we pierced it by a little bit there. And then obviously the triple Qs, they pierced that 618 as well, and they're right kind of into that same vicinity still. There is still a gap fill right at 360, so right there on the QQQ. So it's not that much higher here. It's a stone's throw away. A lot of the time you get kind of an algo. As soon as they make that statement, the Fed makes the statement that they're going to pause, you'll probably get an algo pop. Does that last into Jerome Powell's press conference? That's really going to be the whole story. Honestly, I could see CPI being somewhat of a nothing burger because the Fed is coming right afterwards. So you'll get an algo move off of CPI, but the real move will come, Wednesday, Thursday, which is going to be post FOMC and post Jerome Powell's press conference. So we'll have to see how that lines up. And it does indicate the way things are lining up right now. It's indicative that we're looking at a hike in July. Now the market, Fed funds futures have kind of priced in cuts, a cutting cycle towards the back half of the year. But you look at the 2-year Treasury note yield here, and this is, you're a couple basis points away from a new high here, going back to March, and you get back up to 5%. The Fed won't be able to cut. As simple as that. 2-year yield, if that clips 5% again and gets back above the Fed funds rate, there's just no way the Fed can continue, or I should say that there is only the way the Fed can continue hiking, and they won't be able to stop and go back to cutting. So just be aware of that here. But right now, those are the levels here. So on the downside, if we were to crack lower, your first area here is 420, 418 right there on the spider. So that's that pivot high. Really in the short term, short term, we'll clean these lines up here. If you crack down below 425 and then 424, you've got the gap, but I think you get right back to that double top. So those are your short term levels there on the spiders. For the triple Qs, if we were to break some downside here, you got to get back below this little sell bar on the 7th. We did have a little bit of a dump in tech on Wednesday, but it did, obviously, as you can see, recovered. But you got to get back below that. And if you do that, I think that takes you down to probably 340. If you get through that, then you've got some support around 330 in this area. But those are the short-term levels that we're looking at. Obviously, the levels on the upside here is going to be that big gap fill on the QQQ, and then the spiders here, there is a small pivot here at about 435, 436, and then a big red sell bar there. So those are your levels to watch on the upside. Moving over to the Russell 2000, this has held up well. We continue to have some upside this week. I think this wants to go to 190 to 191. That's going to be this area right here. That's your red bar high. And it's also a weekly red bar high. So I am interested in that area. A lot of this move here to me has come from the KRE, and let me explain why. So the KRE, lots of regional banks, about 20% of the makeup in the Russell 2000 is banks and financials. KRE is generally very low beta, meaning it doesn't move very fast, but it has moved very fast. It's moved 30% off of the lows here, just because of the regional bank volatility recently. And what happens is market participants that own regional banks, they're panicking. They buy puts, right? So they buy put protection. When do they buy puts for? If we're selling off in March, April, and May, they buy them for June. It's not a coincidence that we're starting to float back up here as those puts are probably expiring out of the money, right? If you're buying a put when KRE is at 38 and you're buying it for 34, well, now it's out of the money. Those market makers on the other end are hedging, or I should say, are removing those hedges, aka they're short covering, and it's giving the KRE a huge lift. It's up 13% here since May 31st. So that is a huge tailwind for IWM. So I think a lot of that strength there in the Russell is coming from that regional bank sector as you're seeing that put decay. That will, we'll see how that works because we do have quad witch coming up. Once those roll off, we'll see how it behaves after that. But just a little interesting dynamic I felt was interesting to point out there. Dow here stalling out at 340. We've been talking about that level for a while. 343 is your next level. On the downside, you take out this green bar low, and then it opens up a door for more downside back down to this pivot. So we mentioned rates a little bit here, but we'll look at the 10-year. Again, same kind of chart. Coming back up here, you get above this pivot, this can go back to 4%. 30-year here, again, kind of an ascending triangle look. You get back above 4%, it's up to 4.2 there. So 30-year and rates in general still acting well here, and we get high yield debt. It's not a really good chart here, really, any way you look at it. Weekly, looks kind of more like a bear flag, if anything. Monthly, pretty kind of a bear flag-ish look there, but in any case, rates still remaining strong here. Anyways, let's get over to semiconductors. SMH, again, still holding up here. It backed off of that level at 150, and now it's just kind of holding up. Close out a fractional gain on the week. Let's not make too much more out of it. You get below this green bar though, you can go all the way down to 134 and possibly to the gap at 130. 150 is still resistance here on the upside. IGV had a nice jump on Wednesday, but closed back up near the highs on Friday. Again, still into a lot of resistance here, a lot of chop there. So a lot of market participants that bought down here are trapped in there, so they should turn into sellers. On the downside, if we do take out this pivot, you'll have a little bit of support around 310, but I think the bigger level is around 304 to 300. Dow Transports here, they did have a kind of continuation here. So we broke out a little bit and then backed off and then popped back up. And now we're just kind of coming in. Had a kind of a weak session on Friday. Nothing great here. I mean, lower highs. You have a chance to finally make a higher high, but the transport should be leading. So again, not the greatest signal here to see the transports lagging. They're trying to catch up, but it really should be the other way around with the transports leading. Again, as we all know, a lot of the gains this year have come from, a handful of, maybe 10 to 15 stocks. And again, this is indicative of that, as breadth is really not that great still. All right, over to housing. XHB continuing to push higher here. So that is holding up well. Next level for this is around 77. So right in this area here, 77 to 78, that's what I've got worked out for the XHB. ITB is into some resistance though. But, if it climbs higher, there's nothing to say it can't go test double top. So just be aware of that. Home builders still acting well. VNQ had a nice week here, still closed below the 20-week moving average, but it did get a nice pop. And you finished Thursday, Friday with a little 2 inside days, 2 Wednesdays surge. If this consolidates, it can push higher, but again, I just really hate this weekly look. Big red bar, down move, inside of that, below the moving averages, so not a good look here for the general real estate equities. XLF here, that was up just fractionally on Friday, and still same kind of pattern here on the weekly, still kind of a weekly inside bar below these moving averages, not a great look. I do think the KRE though, you know, if this consolidates a little bit more, this can push to maybe 46. We'll watch that going into OPEX. So maybe that, you know, helps lift the, you know, general sector of financials here. Same thing with KBE, but right now still into some pretty good resistance levels. Right now, XBD finally got up to our 460. We talked about that a lot lately, and then next level is right up here to the double top, maybe 470. A little bit short-term stretched here, but nice bounce there for the broker dealers. You know, reclaimed the 20 moving average on the weekly there, so nothing terrible, but again, still big red bar, and you're just kind of chopping in the lower range of that, so that could be setting up a bear base. Just beware of that moving forward. All right, shifting gears over to energy. So really just kind of a chop slop week again here in crude. Couldn't hold the gains from the OPEC, you know, second cut. You know, pattern right now, I'm just not in love with it. Yeah, I'm really neutral right now. If this takes out 67, 68, it's going to go down to the triple bottom. If that goes, then you're headed down to 50. That's going to be a huge buying opportunity if we can get down there. But we'll see if and when that can get there. But right now, just kind of stuck in the range. I'm not doing anything with it at the moment. XLE actually had a decent week here and ended the week with a little inside day there. Inside day Thursday, Friday. Nothing great right now. I'm still just kind of waiting on these patterns. XOP, same thing, as well as the OIH. Although OIH actually looks a little bit better here. Did not close above 280, but I like how you got back above the 50-week moving average, but I really need to see that close above 280 on a weekly time frame. Anyways, nat gas here still stuck in a range, nothing really doing here. Bounced off that trend line and now just kind of doing some more backing and filling. Not too much to say there. That's just been kind of in a range. But I do like some of these nat gas plays though. EOG, Chesapeake, some of these charts are kind of interesting, especially on the weekly time frame. Chesapeake setting up decently. LNG, if I can type it in, there we go, LNG and EQT. I missed a fill on this by 2 cents on Wednesday. I'm kicking myself. I had an order at 37.48, opened at 37.50, and it just took off there. So I like some of these gas plays here, but nat gas itself just kind of stuck in the range right now. All right, anyways, over to uranium. Big moves in uranium, right? So CCJ, we talked about this last week, power move, and then just consolidating sideways. This is what we want, right? That's what I talked about last week. Just set up, you know, big breakout here of this downsloping trend line. Just do some backing and filling. This will set up for another continuation. I like uranium here. And again, you go back on the monthly. Why did it have to do all this chopping? Because you go into all this resistance here, this big red bar. Look at the volume there. There's a lot of sellers, a lot of supply right there. So you have to consolidate to get through that. But CCJ acting very well here. URNM, this is a monthly. Let's go to the weekly. Got back above these areas, right? So we like that. You get a close above 34.22. That's a negation of this red bar. That means it's going to go a lot higher. So I'm watching uranium here very closely, see how it behaves over the next couple of weeks. But uranium in much, much better shape right now. And it looks like we negated that bear pattern. Not quite yet, but definitely getting there. So interesting stuff here going on in the uranium market. Over to the potash names. MOS getting a nice bounce here. Again, I told you I like this, still like this big 618 level. And sometimes, you know, when you get a big monthly, weekly chart pattern, sometimes it takes a little bit of time to get going here. But it is starting to get a bounce on IPI, Intrepid, right into this little support zone and got a nice pop off of that. Take a look at the daily there. Big move all the way from 17 to 22. So nice pop there for IPI. NTR also getting going as well. So I like these levels here for possibly a nice little zigzag up on the potash names. DBC still kind of just stuck below this area. So that may still need to go down and test that 2150 to possibly down to the 20 handle. So we'll see what that does over the next couple of weeks. All right, over to the dollar index. So dollar index had a little bit of a back off on Thursday, recovered on Friday. I still think the dollar's set up just fine right now. Inside bar on the weekly above the 20-week moving average. No real problems. If this continues to set up a base, it can go higher. It's really that simple. So nothing's really changed there. On the DXY, over to gold. Gold continuing to just kind of chop sideways. I still think this wants to go test 1900. Again, that's going to be that downsloping trend line there. If you get through that, then we'll say 1850 to 1875. But right now, as long as you're above that 20-week moving average, there's no real problems here. Silver actually had a nice week and backed off of 2450. I told you guys to watch that level. We went up there Friday. We backed off of that. I'm interested to see how this behaves. If this flags here, it's probably going to want to go to 25 to 2550. If you get a quick rejection, then we'll see how it behaves there. You'll have to kind of watch 24 to 2350. Those are kind of the short-term levels there to watch for silver. But right now, nice little pop there on Thursday and then a pause Friday. Platinum backed off a little bit here. I still like this on the bigger time frame, but it needs to do more backing and filling. The palladium, that did pierce double bottom. We'll see how this behaves moving forward here. It's just really hard to get a fill on some of these, like these ETFs here, and unless you want to trade the futures market. But I'm interested to see how this behaves now that we've kind of pierced that double bottom. We'll watch palladium here moving forward. Copper, that got a nice bid, backed off of the 200-day moving average. So if you consolidate, you can go to 390. If not, it's going to have a continuation down to 340, and that's really all I've got for it. Lastly, over to Bitcoin here. So Bitcoin, interesting week. Really all over the map. Monday down big, Tuesday right back up, and now just kind of inside of that area. Again, nothing's changed, right? So weekly, you want to see it close above that 20-week moving average. We are currently below that. There's still time on the clock. I'm doing this video Sunday morning, so there is time on the clock here, about 12 hours left before this candle will close, so they can save it. We'll see. I'll be interested to see if they save that. If they don't, I think Bitcoin's cooked. One thing to point out too is the COT on Bitcoin. I don't know if you guys follow Bitcoin futures on the COT, but commercials are overwhelmingly short, and they added, I think, another 500 contracts to the short side. And the retail money is all in long. Generally, 99 times out of 100, the commercial money is going to be correct, and they're usually early, and they've been short for several weeks. So we'll see if this move takes place here. But right now, it's all about that. On a technical basis, it's all about that 20-week move. Yeah, 20-week moving average. You get back above that, Bitcoin is still safe and can still make a new high, believe it or not. If it breaks down below that, I think it's cooked personally. Anyways, lastly, back over to the spiders here. So short-term levels to watch right now, really micro short terms, 425, this pivot low here, or I should say 426, really, 425.82. If you take that out, then you got to hold 424. Otherwise, you're probably going to fill the gap and then go to 420. On the upside, 435 to 436 are pretty good levels there. And then, of course, obviously, the double top as well. We'll see how this week plays out. Again, FOMC Wednesday, CPI Tuesday, TGA drain or refill starts Thursday, and then, of course, Quad Witch on Friday. So no shortage of data this week, unlike last week where there was basically nothing at all throughout the entire week. Anyways, guys, gonna wrap up here. You guys take care. Come find Jason on Patreon. Come find me on carnivoretrades.com. Talk to you all next week.